question. All very well, actually, and the sun's shining for once. We've had
Oh, it's
quite a few
cold here,
or a bit
Chris.
of rain, but yeah, I know they're talking about snow pretty much soon.
Yeah.
And again, there hasn't been much being said about it, but I wonder sort of how Europe's LNG is for this year and their gas supplies, whether
Mhm.
they've been, they've had the opportunity to top them up. 'Cause it seems as though it could be a bit of a cold one this year.
Yeah, well, it's come late though. I mean, like this is 20th of November, and it's the first time I've seen ice on the windscreen. It's the first time I had to go back in and get the water to throw on the windscreen, which is late enough, 20th of November. So we got pretty lucky. But I think sometimes when you get that, you're in for a bad
Yeah.
winter.
You want to be careful throwing water onto windscreens. I mean, you can crack them.
Yeah, just once it's not too hot. So big, obviously a macro week, really. We got this, this week. Yeah, a lot of data. Obviously, you have jobs reports today. We've got everything coming out all at once. It's just how
Yeah, but the jobs
viable is this
reports
data?
exactly. And the jobs report is only for September. That they've moved October's and November's now till after the Fed meeting.
Mm-hmm. Yeah, I know. Yeah.
So I think that the BLS would have been rushing the data. I'm I've put it on some posts and all that. I'm not going to trust any data that comes out of the US until the January next year at the earliest, because I think it's going to be rushed. The shutdown itself is actually going to, sort of make it a little bit skewed anyway and unreliable.
Yeah.
I'm not that massive a fan of all this data these days because I just don't think they get it right often enough. And surveys are a complete waste of time because the response they get is less than 50%, sometimes just over 30. And yet we're taking that as like a guide for what the economy is actually doing, consumer sentiment and stuff like that. But, can we take it as gospel? Because it doesn't seem accurate.
It's such lag on data now at this stage as well. And it's like, okay, well, we haven't. Look, when you see this data coming out now, I wonder will it change perspectives as well, potentially moving forward. I mean, when we actually, that data-driven kind of market environment, but because people seem to be, I don't know, they haven't had the data and they've had to kick on without it. So it's just interesting to see. Like I said to you before, I've kind of turned more to technicals, and it's worked. There's no doubt about it. But I do like to have a stronger bias, and obviously this data doesn't completely change my mind or give me a direction, for a favored direction. But what it does, it just gives me adds to the all round bias of why I want to buy or sell into a market. But like I said, this data is it's old data, and look up I know their consensus is for moderate payroll. It's softer wage growth. I mean, I don't know. I just think does it really matter that much unless we get a big miss?
Yeah, and whether people take any notice of it, because that most people I think are going to question the data anyway. But talking about the bias, it's something when we do our courses and all that I talk about, because I always say it's the fundamentals that determine the trend and the volatility in the market. The technicals come into play because it helps us to identify where the opportunities are, our entries, our exits, and even where to place our stop losses. And of course, timing is the biggest issue for most people. But when those fundamentals are sort of fairly dormant, as they have been because we haven't been getting that data, the technicals become much stronger.
100%, exactly. I mean, at the end of the day, so many traders are trading off that technical analysis anyway. These levels are prerequisite levels. I mean, dollar yen. I mean, like we all had that kind of 157.80 area kind of marked out. I mean, like, and look what happened. We saw that pullback of it. We're going into the charts in a minute, but I agree. For me, technicals are purely about where I can get my stop loss when that trade comes to me. Once I'm comfortable with that stop loss position, again, my bias is telling me either to buy or sell into that market. I'm looking at 3 or 4 different technicals, minimum, like that's it, maximum. I don't boggle myself with. I've tried so many different technical analyses that I get to a point where they're contradicting each other almost, and you can't actually make a decision because you're paralyzing yourself with too much information. I mean, for me, your support and resistance levels, your moving averages, RSI, and when I'll have a look at fibs, but they don't always match up. When they do match up, it gives me an extra confirmation. But otherwise, we're looking at, like you say, pivot points and so on. But that's it,
Yeah, because otherwise you get into sort of analysis paralysis because you're just trying to match everything up. It's like waiting for all the planets to line up in the sky. You might get one trade in a lifetime, but you don't want to. Trading just has to be as simple as possible.
Yep.
Everybody tries to overcomplicate trading when it doesn't need to be. Yep. You look at us and you talk to any other pro trader. I mean, the way they trade is the simple way.
Mm-hmm.
The setup is simple. It's all about the process. It's about repeating that process once you refine it.
Absolutely. And as one of my biggest benefits was I had the opportunity to learn from an institutional trader. And I think, someone like yourself that's been there, done it, worn a t-shirt, decades of experience in market cycles, you've seen it. It's nothing's a surprise to you. And the beauty of learning from an institutional trader is you guys do keep it simple. You're looking at, you have a different approach. You're looking at, real market moves as opposed to noise in the markets. I'm able to identify that, and that's the difference, I think.
Absolutely. I mean, my sort of the first 10 years was all institutional for me, even though it was on commodities, and then obviously I was working for an Italian bank and other companies where I was doing a lot of that sort of thing, order flow, and just seeing sort of everyone talks about all this smart money and all that, but it's just it's just smart traders. It's not smart money.
Yeah. These concepts, I'm not so sure. I just, like, for me, it's like if it can work the simple way, and then you want to look at all this other liquidity grabs and this and that and everything else, it's like come on, like nobody's got the golden nugget. Nobody's got this, this golden goose that shits out golden eggs, and
no one's reinvented the wheel.
Exactly.
It's just, it is what it is. It's just finding, and again, it's a different journey for everyone. It's being able to help people to find what's right for them, the right setup for them that matches their character and their risk appetite. And that's not going to be the same for everybody. I used to be part of a team where we were market making for both the oil exchanges, adding liquidity and all that. And, we used to train young guys up, but I quickly realized that basically all we was trying to do was clone ourselves, which wasn't the right way to do it, because you've got to get to know that person and relate to them and help them to sort of work out what's right for them, find that inner trader, and then sort of nurture that and then help them to grow out what they're going to be doing.
For sure. As to conviction in execution is so key. It really is. And once you can keep that conviction, you remain that confident trader. Your process will work. You can have a bad day, you can have a bad week, but your process is going to come through. And it's as simple as that. It's conviction in execution. And I think that's one of
we all get those little glitches. We always get that sort of bad trade or bad day, or sometimes even a bad week, as you say, but you've got the confidence, but you've also got the results to know that you're going to move on after that. It's just sort of it's you still got that sort of ascent like that. It's just a case it just takes that little blip down. But once you develop a good process and a good trading plan, and a good trading strategy is the most important as well, with strong discipline, then you're going to get those bad days, the same as you're going to get those odd great days as well. There's always sort of one day, maybe a month, where you can't do anything right and you need to know when to stop, and there's another day when you can't do anything wrong and you just got to keep pushing it but protecting a lot of those profits as you go along.
Yeah, absolutely. I couldn't agree more. And so simple. So much of trading is so simple. And the harder we make it for ourselves, the more confusing things get. It's just like, keep it as simple as possible. Understand the market, live, breathe the markets, watch the news in the morning, get an idea of what's going on. But hold on to that bias, but don't you have to be able to change that bias and be malleable with that bias, and that's been one of the hardest things over the last while that we spoke about. But at the same time, then it's that conviction in your execution. You say stay objective, and I think when you have a rule based system, like you know what you're looking for, just don't change it, don't go chasing it, let it come to you.
Yeah, no, absolutely. And that is a trading plan. All they are just sets of rules. For me, it's broken down into two. One is all around the financials, and the other one's all around the trading and the strategy itself.
Yeah. I mean, once you can keep objective, you lose that the whole psychology of trading. It's like you have a trading plan, your execution, and that goes back to what I said about being able to execute confidently, because the strategy that you've worked with, that you've used, that it does pay off. But and that's the thing. I think too many traders are like they can't find that strategy. They're bouncing from one strategy to this and trying to back test this or do that, or it's like, don't pigeonhole yourself into one particular way of trading. And you find traders that only want breakout traders, or traders that are looking maybe to scalp ranges, or like for me, like I'm happy to trade a range as much as I am happy to trade a breakout.
A breakout, yeah, no, absolutely. And I called it cut and reverse. So I might be selling in front of a resistance level, but if it's a major level, then I'll have twice as much on my stop, so that I'm going to go from being short to being long. So you've got the best of both worlds. You're trading the range while it stays in it, but you're ready for that breakout as well. I was doing a session with somebody yesterday, a training session, and he was using Bollinger Bands and all that. And I don't really know how to use these yet, but it was working because I did it as a breakout. And I'm like, but you knew there was going to be a big move because you got that pinch. So I'm not a massive fan of Bollinger Bands, but when you get those two well, you got the three lines, but the two outer lines where they start to really contract in, there's a big move coming. It's just unfortunate you don't know which way. But then once it starts to break one way, then you pretty much should be on it. And he got it perfectly right. The only thing he didn't do was add while it was going in his favor, but it was
that's where you make your money on them big moves. Let me just connect this as well. But let's jump into
I think you're going to meet him soon as well.
Yeah,
because he lives near you.
Is he really? Yeah. Oh, is this the guy? I think I spoke to him yesterday. Actually, yeah.
James,
lovely fella.
Yeah.
Okay, so let's have a quick jump in and have a look at these markets. Again, I suppose let's start at the dollar, I guess.
It strengthened up a bit yesterday. Again, it's within the Fed itself, and you saw that from the minutes last night, that it really is a bit of a sort of a split panel at the moment, that committee, because you got half of them that are focusing and want to stay focused on the inflation, and you got the other half that are more focused on jobs and the actual condition of the economy. Because when you look at the economy, it's only that sort of the top 10-15% of earners that's really keeping that going. Everyone else is just living paycheck to paycheck. And of course Trump sort of reduced the tariffs on beef and some other items this week, food wise, to try and sort of cushion that. It seems like he's almost preparing for the midterm elections already with some of the things he's trying to bring in. He needs to start to get the people back on side because I think he's alienated a lot with tariffs and the cost of living. Yeah,
I mean, it's got to a point where it's a tipping point in the US, especially from people I've spoke to over there. In terms of their cost of living, it's gone insane. Now, I mean, I'm not being funny. I mean, looking even at when I go into the shop, I went in to buy a bar of chocolate for the missus the other day, and I don't really eat chocolate, but went in, it was like £3 for just like a Twix or something. I was like,
I mean, it's crazy. And I'll tell you what, if you look at cocoa prices, it's half of what it was at its peak. And they've made the bars smaller. Shrinkflation. They're charging you a higher price. And isn't it amazing when prices go up, they sort of come down. qualify why they're putting them up. Oh, this has gone up, that's gone up, and they pump up the prices. But then when all of that sort of disappears, the prices stay where they were. They never come back down again, and especially in the chocolate industry as well.
Yeah. It's
like cocoa's less than half its high now.
There has to be a tipping point, though. There has to be at some point there we have to see things start to drop. I mean, it's not sustainable. I mean, it's not.
Well, when especially when it comes to food, but then again, they got us over a barrel because they all know we need to eat. So they just do what they want to do, and of course, I think that there should be sort of like maybe a bit of extra tax on some of these companies that are profiteering food-wise, because I think that's been one of the biggest problems, and it impacts the lowest earners and the mid earners much more as well.
Yeah. It looks like rate cuts. We're not going to get a rate cut in December by the looks of it.
I think it's still probably a 45, 55, whether they will. It's going to be very difficult for them to justify it from data because they're not going to get the data.
Mm-hmm. Yeah, well, look, there's a big split. Obviously, we've got Jefferson and Logan speaking tomorrow, isn't it?
Yes, I believe so. And of course, we still haven't got the outcome of the tariffs. Now, even if the tariffs vote against Trump, the Supreme Court comes out against Trump and the government, then he's got other sort of legislation that he can use to keep the tariffs in place. There's 2 or 3 different rules that he can use for that. So it's not as if they're going to be gone. It's just that because what he used was sort of almost like an emergency power to have the impact of imposing them immediately, whereas these other ones might be a little bit more of a longer process. But once they're in place, then he can keep them there. But as you see, they're starting to negotiate with more countries and bring those rates down. I mean, Switzerland's now down to 15% from 39%.
Yeah.
They got from one of the highest to one of the lowest, so they've done well.
Yeah. Just looking at euro dollar here again, we're I mentioned it in the app as well. Like we're seeing this kind of break at that kind of ascending trend line, descending trend line here. This was really key for me, and then seeing if we could push above that kind of 1670 area, and if we could, there's a potential for further upside. Just run out of steam again. Dollar just. Everything's all over the place at the moment, and that's why going back to like trying to build a bias or whatever, that's changing, and it's like, okay, let's just go back to the technicals, and generally they don't lie. We can see price now back into that downtrend. Good chance if dollar continues to strengthen, we're going to see that price will open up down to that kind of somewhere around that 147 area potential, and even down towards that kind of 141 area as well. So I mean, it'd be interesting to see 140 area if we do see that continuation. Price is under pressure, has been really under pressure since September, and it's hard to see that change anytime soon.
I think most are looking to sell the rallies rather than buy the dips with it for sure. But it's crazy, isn't it? At the end of last year and the very, very beginning of this year, we was all talking about the dollar and the euro at parity, and then obviously things changed around quite quickly with Trump from April and all that with his tariffs and everything else, which weakened the dollar. Dollar's still about 7% lower than where it started the year.
Yeah, I know, so but
there is still more room for the up.
Exactly. Yeah. Again, we've seen a bit of movement in pound dollar. I mean, what was a 2-week range, kind of sitting within. We've finally seen that break to the downside. Again, at 130, I think it's probably going to be key for if it can hold on to that level.
I think it's going to struggle. I think, especially in the UK, I mean, we've got the budget coming up, which is going to be terrible. Whatever whatever they do or they don't do is still going to be bad. They've got a black hole that they can't fill. And of course, you got dollar strengthening at the same time. I just haven't got any confidence in the pound.
Yeah, no, I agree. Yen is the big story.
Yeah.
What is this kind of 10-month lows? Do you know, not gonna way it's we're getting right up there now.
Exactly.
Obviously they're waiting on the stimulus package to come out, see what's going to happen there. What's your thoughts around that?
Yeah, I mean they've still got inflation issues, higher wages, and all that, so they're struggling. But interest rates 0.5%. They're talking about there's another rate hike in the pipeline, but now they've got the new prime minister and all that. I'm not so sure when it's going to come.
I think it's 20 trillion yen. This stimulus package is going to be.
Yeah, well, they got a lot of debt already, though.
Yeah, this is the thing. We'll push bonds lower. But yeah, look, I mean, again, we also know at this stage that this is intervention area. This really is, and that's I think I mentioned it in the app as well, that the only thing stopping price from going any higher is people are afraid that there could be an intervention, and if there is, like we've seen what happened before. I mean, look at these moves that have happened before around these areas. And you just have to be wary of that now at this stage. I just can't see price being allowed to go over that kind of 1617 area, 161 area. I think when it gets anywhere closer to that, I mean, they have to. I think they have to. They can't.
I think you're right. I mean, I traded it off of what you posted in the app the last time. So
nice. Dollar CAD again. Again, obviously, we all know CAD is very much correlate to oil prices as well.
Just commodities in general, really, but oil definitely.
We saw a nice kind of a bounce around that 61 fib. Again, price kind of really kind of struggling around this area. We've seen it all the way back from kind of the 14th of October, struggling to kind of break that resistance. We saw that kind of break, and we're retesting that now again. So it'd be interesting to see if we do get a break back up to that level, or we're going to see a continuation of this kind of sideways movement. But yeah, I mean, for me, I think there's still further upside, and I'm still targeting kind of somewhere around that kind of 150 area. Be interesting to see. Aussie dollar. Again, I haven't really traded it, I'll be honest with you. Just thought I'd open it up, have a quick look. Some real nice levels of support here, it'd be interesting to see if we get a break at that support level, because it could really deepen the decline.
For sure. Yeah.
Let's have a quick look at what story of the day, really. NVIDIA, pre-market 195.60, some nice earnings reports coming out.
It came out top of expectations again. So, but you got to wonder if they could just keep doing this. So the chip demand is there, especially for their new chips. That's really coming through. But and again, is that a very sort of global demand, or is that very much around sort of some of the others like Meta, Microsoft, and the big other guys in the Mag 7 that's taking basically all that supply?
Yeah, there's nothing budging them from being the top honchos in this industry. They are the main guys, So
absolutely, yeah.
All this talk about kind of overextended, AI prices and all this kind of stuff is fair, and I wouldn't disagree with it. But at the end of the day, this is the future. This isn't going to stop tomorrow. This isn't going to, everything is. All of the wealth is being focused and pushed towards AI. It's just simple. And as we see the development of the supercomputers, quant computers, all this stuff, is only going to inject further into these type of companies, because you need the chips. You need the chips to build them.
Yeah, and it's the guys producing the chips that's going to make all the money. Absolutely. The question is about the guys that are buying those chips. whether they can recover the cost of everything from the data centers, the electricity that they use, the water they use, and obviously the construction of all those data centers, whether they're going to see a return on that investment. Because, collectively, you're talking trillion plus dollars.
Yeah, so there's two sides to look at it, right? You're a business, and you understand that if you don't continue and there's a race for AI, right? And if you step out of that race for AI, there's a good chance your business is just gonna see a downfall, and that's the simple as that. If you can't keep up with the competitors, then you're just gonna fall off. And that race is what is stimulating this. Do you know that kind of way? It's like everybody wants to be the first to the top, but also nobody wants to be the last.
You don't want to miss out because you're late to the party, sort of thing. But so you don't want to be seen to be late to the party either. But Apple interests me there because obviously they're investing in AI, but they seem not to be sort of overly invested in it.
It's a clever approach to use other people's AI. I mean, like
exactly, they're doing deals with Google and Meta and other companies to take advantage of what they're creating rather than having to do it themselves and have all that sort of cost of the R&D.
But even Google, I mean, Alexa is probably one of the worst AIs now as well. Like, I mean, like ChatGPT and, Grok and some of these other guys, like they're head and shoulders above anything else. So it's like, why not allow these guys to kind of continue on that development? What's the point in trying to do a better version of it? Let's just integrate it and see some cross-selling within the product. So that's another thing that can happen. And if that does happen, and that may slow down some of the growth, but it will allow a more stable growth, I think.
Yeah, something that I saw quite interesting, I think it was even yesterday, was a survey, and it was about people that were using AI in either personally or their businesses and all that, and the accuracy of it. And probably over 70% were saying that it wasn't that accurate what was being sort of drawn up. Now, again, is that the fact that the AI is not, it's not being able to differentiate between what's genuine and what's rubbish out on the web, or is it that it's becoming creative and actually putting its own something in there as well?
Honestly, as I've been working with AI for the last 12 months, kind of in depth in AI, my answer to that would be a few things. I suppose, first of all, is it has to be prompted correctly. Number one, there's no, like, it's all well and good putting a basic prompt in and it coming out with whatever information it wants to kick back at you. But if your prompt is good enough, it will be specific. Then the other side of that then is what we found is, we need to understand if it hallucinates, because that's something that it can do as well, right? So what we have to have checks and balances in place. So what we have 4 different bots, and what they are all doing is they're all figuring out which one is potentially slightly wrong, and then we get the correct answer, because any anomalies within them answers what we're getting is then being identified by another one. Do you know that kind of way? So it's like so there's always ways to make something work in the right way. Like we don't realize how new this is in terms of advancements. Like, it's incredible how far we've come in AI in the last short amount of time. But like everything, we're human beings. We expect things just to be the best straight away and immediately get what we want now, and we want things faster and quicker. And so, it's there is that phase, and it will continue to get better and better. But there is checks and balances you can put in place to make it better. There's no doubt.
Yeah, and that's clever. And it's, so you got bots monitoring bots, really.
Yeah, exactly. Because they will hallucinate now and again. Especially the more they work, the more you overwork them, is the more they will look to give wrong answers, because they're trying to figure stuff out. And like I said, the key to that is prompting them correctly, so they're looking for the exact thing that you're looking for, as opposed to going out and looking everywhere. They're looking very much focused upon what you've told them to do.
Yeah.
And again, we've seen Apple kind of hold its gains. Amazon, we've seen a big sell-off in Amazon. Big sell-off really in Amazon for them highs. Microsoft, same vein. Meta, again, just can't get any any movement other than downside at the moment. You know,
Yeah.
we saw this big move. We're expecting potential upside. I wasn't. I actually said to one of the guys in the app, goes, you know, is there a potential, you know, buy opportunity? Is that like, not for me? I see that continuation to the downside. I wouldn't be looking at any setups right now.
Yeah, catching falling knives is a dangerous trade.
Yeah, absolutely. Absolutely, 100%. For me, if I see that, I want to be on the downside of that, not trying to, you know, catch it on the way back up.
Exactly, yeah.
You know?
But again, it's just, you've got to bring your bias into it as well,
Yeah.
haven't you?
Absolutely, 100%. That was double top on AMD again, still holding somewhat of its ground. Decent trade that was back a while ago, you know. Something I called a long time ago, AMD. Again, you know, if we just jump into some metals, we'll have a look at gold. You know, we've seen this kind of bit of a head and shoulders pattern form back in, you know, mid-November.
Yeah, for the last 2, maybe 3 weeks, I've been trading that from the short side. Again, it's just getting your timing right on it. And again, on the odd occasion, just sticking with your view that you know you're right. You just got to weather the storm a little bit. But you've got to keep that stringent risk management. But or if you get stopped out, you just wait for the move to start again, and you get back in again. So
yeah, keep your conviction, and that goes conviction of execution, and that's the difference between how you trade and how most other traders look at the markets and be like, oh no. You know, they don't realize, well, okay, you might have missed that move, but there's another opportunity straight away. You know, that kind of way.
Yeah, because you sit there licking your wounds when it's okay. Well, that one didn't work, but I know I'm right. I just got to get the timing right for when it does start to move again.
Yeah, absolutely.
And not necessarily just move on to something else because it didn't work for gold. Let me have a look at let me go and look at oil or something. No, just keep with that. It doesn't stop you from looking at other contracts as well. But you're waiting for that signal to come back in and tell you was right. It's just that your timing sucked when you went in last time.
Exactly that. Actually, I just want to quickly go back to S&P because I know you've had some interesting trades on this as well. Maybe you can talk us through it.
Yeah, I posted it on the app as well. It was I just sort of saw it as the market was due for a bit of a sell-off. Again, bias coming in there for the downside, but it was a breakout level. So when it broke that level, I had a nice line coming across, and I posted it in the app as well. And I put all the lines on there of where I wanted to enter. I had 2 entry levels for the breakouts. I also had my stop level above, and then 3 take profits. And I got 2 take profits the same day. Just got the second one, and then the following day I got the last one as well. And of course, it's had that bounce now. So again, just don't be too greedy when you've set your levels and you know what you want to take out of it. Just stick with it. I mean, otherwise put a trailing stop on or something, but don't just sort of watch your P&L grow and then just evaporate.
Yeah. Are we seeing a bit of a change in momentum now, though? I mean, across these indices, do you think?
It's possible. I mean, generally, sort of the very early part of December, you tend to sort of get a little bit of a sell-off anyway, where people are releasing capital for Christmas or closing down their books and such like. And then, of course, that end of the year, you'll get sort of quite often the funds coming in and bumping up the prices if they can, because the markets are very thin, so it's easier for them to do that for their end of year marks, so that it makes them look as though they've had a better year, and they try and keep it up for the first week or 2 of January as well, so it doesn't look so obvious. But I mean, I've just got serious doubts about the economies and everything at the moment. Inflation may be coming more back to where you want it. It's obviously lower than we've seen it, but I don't think that that's over yet. Again, if Trump starts to continue to negotiate lower tariffs with countries, which he seems to be quite keen on, then if it could give countries a chance to cut their rates a little bit more, which again helps companies as well as individuals, and maybe just get the building industry, construction industries going again, because I think they've been struggling. I mean, I just reading this morning that China's looking at another cash injection to try and obviously get their construction going. Well, not building. They've got too many homes already, but actually to get the property market moving again, because they've got all these ghost towns and cities and that.
Problem with construction, I know in Ireland specifically, in the UK, is like, these new regulations have really hurt.
They're strangling. They're strangling. Probably the big companies, but definitely the smaller guys. I've got a lot of construction guys that I train and everything, and they tell me it's like it's almost just not worth doing because there's so many constraints around it, and especially around sort of the environmental aspects, much more than even just some of the basic building rules. But it's taken the fun out of it. It's also taken a lot of the profit out of it. And again, when you look at sort of the China's got millions of homes they can't sell, and yet in Europe there's millions of homes that are needed. You just wish you could sort of like move them across. But it's a case of, with that, in the UK, I say this a lot, that only about 7% of land is used for residential purposes. It's time the government sort of opened that up a little bit. I'm sure everybody loves to see that their home price is worth so much, but then if you're going to move, you're still either paying more, or if you're downsizing, it's the only time you benefit from that. But we need to get more youngsters on the ladder. It's not fair that they're having to live with their parents until they're in their 30s or 40s. So it's crazy.
It is crazy, and I don't think it's good for the next generation's kind of morale and how they perceive things. And everybody wants to feel like they can become a homeowner and have that kind of
security and future.
Yeah, absolutely. I mean, I know there's that European model that they love to kind of rent as opposed to buy, but it's still ingrained into us that it's bricks and mortar is always, that's something you're going to pass.
It's going to be a good investment, right? and obviously it's something that you need and you pay off. I mean, because otherwise it's a real sad situation, because you got all the guys in their 30s and 40s waiting for their parents to pass so that they can live there for themselves. Do you know what I mean?
A lot of this has happened. The funny thing is because we need two incomes in a household now. You need nearly 90%, I'd say, of incomes in a house has come from both sides. So therefore you've got you have two incomes, but at the same time that's strained, because I mean a 3-bed house here will cost you over $500,000. I mean, like, what that does, then it stops people from spending in the economy. You're not going to your local restaurants, your pubs, so it's a vicious circle.
Yeah, because they're desperately trying to save so they can get a deposit together or whatever they need to get on the ladder. But and again, a lot of it comes down to the parents having to give that helping hand. But whichever way it's done, you're just still taking money out of the economy.
Yeah, agreed. But sure, it's not going to be fixed anytime soon. Again, European indices, again, same vein. We're really actually looking at UK 100. I mean, like, that was really going strong. Honestly, I didn't expect that move. Again, I was potentially looking at sell-off areas around here. We saw that kind of double top sort of breakout, but didn't last long. Price now back to kind of areas where we might be looking at pulling the trigger again soon enough. I want to see if this area of resistance around that kind of 9.6 area or so is gonna hold, and if it does hold, I'm certainly looking for a potential sell side move.
Yeah, again, possibly a bit around the budget, but also just tracking what's going on in the US.
Exactly that. And then just, I suppose we'll finish off on WTI and maybe have a quick look at Bitcoin if you're looking at the moment. I'm not.
Yeah.
WTI again. Like we saw this move, like we were waiting for this kind of breakout on the outside. I know you took a trade actually recently in WTI as well. We did see that breakout, and I actually really thought we might see a continuation. But once again, we just see these ranges, these couple of dollar ranges.
It's either $1 or $2 range that TI just gets into, and then occasionally it sort of reset what that $2 range looks like. It's very difficult for it to break on the upside at the moment. There's a big sort of difference between the expected demand from OPEC and the IEA, But for me, as I've been all year, I've just been looking to sell the rallies in WTI.
Yeah, I mean, look, are we going to get anywhere with this potential US Ukraine talks at the moment? Is that going anywhere, do you think?
Sort of, again, they're sort of trying to squeeze Putin for the cash so that he doesn't want to bombard or he can't afford the war any longer. Trying to the EU's coming out with some more rules around the shadow fleet that they run to move their oil around and that. So they're trying to put financial pressure on Russia. But then, I mean, if you look over the last couple of days, they've one of the biggest sort of drone and missile attacks on Ukraine that there's been for a while. So they're not giving up. And of course, they're trying to get that all of this and sort of cement any gains that they've made because it's coming into winter. So there's not going to be that much room for any advances, I would think.
Again, there's still other geopolitical kind of issues and tensions around kind of Iran as well. They seized a tanker, which is a silly move. We also saw that Russian surveillance ship off the UK coast as well. I mean, what are they playing at there? I mean, like these, obviously they're looking at underwater networks and all this kind of stuff, right?
And of course, they've been firing drones and things that testing Europe's airspace at times as well.
How are they allowed into their waters? I mean, how is that allowed?
Well, it's not. But again, they're just testing all the boundaries to see where there's any weakness or give or there isn't. Again. But I'll tell you something that's gone really, really quiet. Now we're talking about that is Israel.
Mm-hmm. Yeah.
I know they had the ceasefire, but then there was a sort of a couple of break-ins of that. But it just seems to like almost as if it's gone out the news at the moment.
Yeah. You know what? Now you say it's funny because it's not something I've even thought about recently. So to show you that is true. I mean, do we even know what's going on there at the minute?
No, and okay, so they're supposed to have this ceasefire. Maybe it's working, but you're not even hearing about what's going to happen with Gaza. What's going to happen with Palestine and how that's all going to work, or any rebuilding or that. But again, it impacts the flow of oil. So
yeah, interesting.
And a lot more than just that, because I mean, obviously, all these water shortcuts that are used, the Panama Straits of Hormuz, etc. I mean, they're used as shortcuts, but I don't know if we've mentioned this before, but about 80% of global goods are moved by sea.
Yeah. Lastly, Bitcoin. Still struggling, eh?
Yeah, again, the expectations were with the ETFs regulation that it wasn't going to go through a crypto winter, but I'm just not so sure.
Yeah,
I've always been a fan of Bitcoin, not a fanatic, but a fan, and I've never been a hodler. I trade in and out. I'm not going to just sit there and hold on to it.
Mm-hmm.
And I've had one or two of the guys that I train that I know that have been long of it since even the last winter or the one before that. And I'm like, you need to be either moving your coins or you need to be locking in some profits now. Don't think it's just going to go on and on forever, because you can always buy back. If it comes down, you can buy back. If it breaks out, you can buy again. But don't just sit there for 8 years on the same position. I mean, it's just, for me,
especially when you're seeing the movement.
Sense.
Especially, I mean, I have so many people come to me that they're just kind of passive investors. Nvidia was a big one. What do I do? What do I do with Nvidia? I'm not sure what to do. Like, it's a conversation that it's nearly impossible to have with people, especially friends and family and things like this, because it's like, you have to, you're a passive investor. You're not somebody who does this as for their livelihood or whatever the case may be. You're sitting on a few quid, you threw it into Nvidia or whatever else, and it's kind of like, let's see how it goes. For me, it's like, right, take out your profits, leave your investment in there, and see how you go. That kind of way. Like, nobody has a magic ball. Do I think things are overextended? Yes. Do I think we could see a big sell-off coming down the line. Yes, it could definitely happen. So why would you not want to take out your profits? I mean, it's greed and fear, right?
Yeah. Or if you're that concerned, I mean, you could do different types of strategies like buying put options, which give you the right to be short. So, but if the move keeps going, okay, you know, you've lost your premium, but you still got the value in the underlying that's still increased.
Exactly that. Absolutely. Yeah, that's true. That's a different world.
Yeah, I mean, I've with another customer that I've been training. I mean, we're still long the 6,800 put options in the S&P.
Right.
We bought them probably 2.5 months ago. We've already more than covered the premium because we used the futures to hedge in and out a couple of times. So
Nice.
we've more than covered. And we did a ratio called put spread as well. So I'm not going to sort of try and blind you all with science, but we took the profit on the call. We're still running the puts, and of course they run out a month yesterday, so we've got them even over the next Fed meeting. So you know, we've got the right to be short at 6,800 on the S&P.
Nice,
which is a nice position to be in.
Yeah. It's interesting. Like, it's a completely different way to look at it, and I think it really brings out that kind of an advanced trader in people once you start looking at, you know, completely different ways to actually enter and exit the markets and different strategies that you can utilize. It is a different world. It really is to your
lots of different ways,
so many options.
And yeah, exactly. And you know, again, that's something that we focus on is providing that all the different ways that you can trade so that people can work out what's best for them.
That's the thing.
You know, and one size fits all.
Absolutely. And you'll get people who, you know, most people are trading working 9 to 5 jobs. And it's like, look, you don't need to be in front of a computer for more than half an hour a day, realistically. Like, you know, once you understand what the market's going on, you can open up your laptop in the evening, you can set your positions. If you want to stick on a few, you don't need to instant execute either. You can stick in your orders and let them play out.
Yeah, just leave them. Now the best ones, let the market come to your price. Okay, what's your worst case scenario? You don't get a trade on. But and again, you know, it's a great point to make because, you know, for a lot of professionals, swing trading or options are a much better route to take because they haven't got to sit there in front of a screen for 2, 4, 5, 10 hours a day.
Yeah, absolutely. It's a conversation I have quite a lot. Let's leave it there, Chris. That's been good. I really enjoyed that, and hopefully people got some good value from that as well. And like I said, guys, if any questions, make sure to stick them in the app. We're always happy to jump on and answer any questions you guys have. Chris, it's been a pleasure.
As usual, I look forward to next week's.
Absolutely.